Portugal has the funds, but the rates it's paying are still pretty punitive. Ireland and Greece before it were forced to seek help when borrowing costs nudged above 7%. Mohamed El-Erian is the Chief Executive and Co-Chief Investment Officer of PIMCO. That is the world's largest bond trading house. He joins me now from Newport Beach, California. Thank you so much for joining us. Did you buy any of these bonds?
We did not. We think it was a successful auction, but we got to remember three things. First, we shouldn't be worrying about a government auction in a European country. It should be automatic, which speaks to the issue that this is not about a one-off auction. This is about an underlying problem. Second, a tremendous amount of effort went into preparing for the auction. The ECB stepped up its buying of Portuguese bonds. The EU started talking about giving more money for the peripheral countries, and China, Japan, the US made a lot of supportive statements. So you can't do this every single time. Thirdly, Portugal, like Greece, like Ireland, has a debt problem, and piling new debt on top of all debt doesn't solve your debt problem. So I would be qualified, and because of these reasons, we did not buy today's auction.
You know how the bond markets work. Is it your understanding that the Chinese were heavily involved in this and they effectively propped up the auction?
We do not have underlying data, so I don't know. But what I know for sure, because it has been announced, is that a lot of buying came ahead of the auction in order to prepare the market for the auction.
Yeah, and that's what kept the rates below 7%, isn't it?
Correct, but even at 6.7, as you cited for the 10-year, that is not a good rate for a European economy. European economies are not wired to operate at such high level of interest rates.
OK, the finance minister there was very pleased. He said it should reassure the markets. You, in large part, represent those markets. Are you in any way reassured by today's auction, and does it mean a bailout is less likely?
I think it's inevitable, and here I agree with Ken Rogoff. It is inevitable that Portugal is going to need money from the official sector. And that is because you cannot simply pile new debt on old debt and assume that the markets will continue to cooperate. The markets understand that there's two distinct issues, a debt overhang and a growth issue. So it is inevitable in our eyes that at some point Portugal is going to need help. And the question is, will that help be used to deal with the underlying problem, or will it be like Greece and Ireland, where simply it postpones dealing with the underlying problem?
When do you predict a bailout is likely to come?
I suspect that within the next 4 to 8 weeks, we're going to hear about more funding being made available, first from the EU and then perhaps from the IMF. In the meantime, you should expect the European Central Bank to be buying even more in terms of Portuguese bonds.
And we should expect Portuguese ministers to say they're not going for a bailout until it's agreed.
Correct.
Okay.
Yeah, you always, that's the old rules. You always say you don't need it till you need it.
We learned that from Ireland, didn't we? Thank you very much, Mohamed El-Erian. Thank you for joining us again from PIMCO.